What is up, everybody? Welcome back to Bitcoin and Markets. Ansel Linder here. Today, we're going to be going over a live CPI release and reaction. Try to do these every CPI. Let me share my screen and jump right into it. So this is bitcoinandmarkets.com. That's where you can go to stay on top of all of my content. I'm going to be dropping a podcast version of this Monday's live stream here pretty soon. Excuse me. So yeah, check out bitcoinandmarkets.com. Now let's get into the Bitcoin chart because we're going to be watching this reaction this morning. Had a nice little bounce here, like I was talking about, bounce off 25,000 up into the death cross. We'll see. Price tends to want to go towards the Schelling point, and the death cross is a Schelling point. So is 25,000. So we got some, back and forth movement here on the price. So let's jump into CPI. We will be watching for this, how Bitcoin reacts to the CPI. But let me bring up this tab. So this is from Zero Hedge, and the title is CPI Review or Preview, Biggest Jump in Headline Inflation in 14 Months. The inflation party is over. After headline CPI dropped from a Banana Republic-esque 9% last June to only 3% this summer, it finally rebounded in July to 3.2% and is about to rise higher, perhaps sharply higher, in coming months. Now, one of the arguments for this is that oil is going up. So actually, let's go back to the price and go down here to oil and see what it has been doing. Go to the daily chart. And I'll take off these EMAs. Okay. So there was some news out of OPEC that they're going to keep their 3 billion quota cut on the books. And you can see they have cut in the last year or so. They've cut 4.6 million from OPEC's quota. And it looks like Saudi is going to keep that going. So yeah, price has gone up. But remember, it's the average price of the last month. So if we're looking at August, let me get my drawing tools out. If we're looking at August, it would be this box. And let me make that a little darker here. Or I'll outline it better. So it's the average of the price in this box. It's not the ending price, which would be, this is actually September 1st. So the ending price is even one further back. It's down here at 83, but you can see the average didn't really move all that much. But let's look at the average from the previous month. And that would be July. So the average did go from roughly 75 up to about 81. That is not drastic, but we will see. Everyone's thinking oil is going to be pushing this CPI higher. So let's continue with this preview. Indeed, if consensus is right, tomorrow's headline CPI will print at 0.16% month over month. Holy crap, that would be insane. Versus just 1.7% previously. 0.17% previously. Its largest monthly increase in 14 months. We'll see. That's very high in my opinion. I think we get a surprise to the downside. So you see they expect a 0.6 print. I could see a pretty big miss to the downside. I was looking at inflation nowcast that comes out of the Cleveland Fed. And I was going back weekly in the weeks or in the months and looking how far their prediction has missed. And they missed by an average of 0.25% per month. And that's a lot if you're talking that the total was 0.2, say, inflate, like May and June, they're way below that. So they missed it by over 100%. And so that's pretty insane. And so if they miss this by 0.25, it'll be down here at 0.35 for CPI. But anyway, let's bring up the BLS website. I don't want to miss the live drop. bls.gov/CPI is where you can go and watch this. Oh, what the heck is going on here? All right. I want CPI. Share this tab. All right. So here is, you can see it says July down here. We will be watching this for when the drop happens at 8:30. So it should be in 1 minute. Let's go back to here and read a little bit more. Resulting in a 3.6% increase in annual inflation, up from 3.2%. Remember, year on year is confusing because it is not an instantaneous rate of change. The base unit is not year over year. The base unit is month over month. So it does not register the changes in direction very well. That's why a lot of people miss the transitory, even though last July we knew that CPI hit a brick wall. That it didn't show up in the CPI year over year. It did in the month over month, though, because month over month is instantaneous. Back to the BLS site. Let's refresh. All right. August CPI for all items, 0.6% month over month. That is huge. Of course, higher than I expected when we were just talking about that. Let's see. So the CPI rose 0.6% in August on a seasonally adjusted basis after increasing 0.2% in July. All right. 12 months, 3.7. So that's up from even what the people were expecting there from Zero Hedge. That's probably a rounding difference. The index for gasoline was the largest contributor to the monthly all items increase. And we didn't look at gasoline there just before this drop. We looked at oil, but we can take a look at gasoline as well here in a second, accounting for over half of the increase. Also contributing to the August monthly increase was continued advancement in the shelter index, which rose for the 40th consecutive month. The energy index rose 5.6% in August as all major energy component indices increased. The food index increased 0.2%. Food at home increased 0.2%, and food away from home 0.3%. The index for all items less food and energy rose 0.3%. So that is core rose 0.3%. And that, what does that equal for the 12 months? At 3.7. No, that's wrong. What do we got here? Core should have come down quite a bit. Okay, 4.3%. So core rose is year over year, 4.3%, and headline is 3.7. All right, so that's it. Let's go down and break out this table down here. I wanted to see the shelter component, which is down here, and we can see that it came in at 0.3% in August. So it continues to fall. Remember, this is the lagging indicator. So 0.8, 0.6, 0.4, bounced up to 0.6 in May, 0.4, 0.4, 0.3. So it continues to slide down and just, following on with the rest of the CPI. What does the Fed think about this? Well, the Fed looks at core. So if we go back up here and we see core, it continues to fall. It's down to 4.3. That they will be more interested in that. And actually, they don't look at CPI all that much. They look at the PCE deflator. That's like core in the CPI, or more closely related to core. So most likely that will continue to come down. But interesting. It's all about gasoline right now. Let's take a look at the charts and see the reaction. I'm going to go to Bitcoin, go back down to the hourly. A little bit red, but when Bitcoin starts to move, it's not going to care about things like this. It moves. It has its own supply and demand. It has its own mind in a lot of these things, and it is a leading indicator far before much of the rest of the market. So tiny little red candle here on this. Let's go to some of these other ones. The futures are delayed 10 minutes, so I'm not going to be able to see what the futures are doing, but we can look at the dollar, see what the dollar is doing. Wild candle on the dollar. It was up quite a bit. Let's see, what move would this be? Right now it's even since the drop, but it was all the way up here at 104 spot 95, and it's down here at 104.78 now. Moving. Take a look at interest rates. The 10-year popped higher. Okay, a lot of people are worried about this. Of course, this is a big deal, but we are approaching those highs from back in late August, but we're not there yet. So we will wait and see how that reacts. I cannot look at the futures price because it's delayed by 10 minutes. But so far, there isn't much reaction out there in the market from this CPI. I think since it came in as expected, there was no surprise. If it would have been over or under, the markets would have reacted a lot differently. But since it came on pretty much bang on estimates, that there was no surprise here in the market. Overall, that's what I wanted to do on this live stream. Just react to the live CPI drop. Hope this provided you guys some information. And check out bitcoinandmarkets.com for all of my content and ways to support the show. And that's going to do it. Thanks, guys. I'll see you on the next one. Bye.